It's occasionally back in conversation simply because of the NVIDIA RTX name recognition, the ongoing AI and GPU narrative in crypto, and the fact that some holders still treat it as a high risk play on that cultural association. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on RTX. I actually read them. Looking at ratings and signals, almost everything leans negative to strongly negative. Algorithmic scanners, community sentiment, and pure technical tools have little positive to say about microcap memes with this profile. There is virtually no traditional analyst coverage, so most of the ratings come from chart based systems and on chain observers, and those stay defensive. Short term outlook from the technical side remains weak until price can actually build higher highs and higher lows with meaningful volume, something these tokens rarely sustain once the initial wave of attention fades. On the technical side, the bigger picture for a token this far down the rankings is typically a short, sharp run followed by rapid cooling. Price action tends to be highly illiquid with large percentage swings on relatively small volume. Any upward moves often get sold quickly, and support levels are fragile because there simply isn't deep buying interest. Momentum indicators, when they can even be read reliably on such low liquidity, usually spend long stretches in weak territory. Short term, any bounce looks like a low liquidity reaction rather than a genuine trend change. You can argue that at these ranks, the downside is limited by lack of interest, but the chart itself shows the classic pattern of a meme that has already lost most of its initial heat. What's going on with NVDA RTX stocks right now? The chart sits deep in the lower ranks, volume is thin, sell pressure has dominated much of the recent action, and yet you'll still find people arguing this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. NVDA RTX stocks ticker RTX is a low cap meme token on BNB chain that draws its branding from NVIDIA and the RTX GPU line. It positions itself as a community-driven experimental token aimed at GPU enthusiasts and meme stock style speculation, with no official connection to NVIDIA or any traditional stock. Like many similar derivative memes, it launched with heavy reliance on cultural association rather than formal utility or a developed product. It currently ranks far down the market cap list with limited daily volume and a price trading near the levels you're seeing after whatever initial momentum it had. Here's the real debate. Is RTX actually undervalued at these levels, or is this a classic value trap after a short-lived meme run? One side points to the NVIDIA/RTX cultural association, the AI and GPU narrative still floating around crypto, the low absolute market cap, and the idea that any renewed attention on hardware or meme stock themes could send forgotten names higher. They argue that at these ranks, the risk reward looks asymmetric if attention somehow returns. The other side says, look at the history and the market structure. Tokens built purely on borrowed branding with no product, no utility, and thin liquidity almost always fade once the initial speculative wave cools. Volume is low, mindshare is minimal, and there is no strong visible catalyst that would reverse the decline. That's the classic trap. The name still sounds familiar, the narrative still exists on paper, but the market has already moved on and treated it as largely irrelevant. Bull case versus bear case is stark. Best case, the AI or GPU narrative somehow reignites interest in derivative memes, liquidity improves, and broader market risk appetite returns to forgotten low cap names. In that scenario, you could see sharp percentage moves higher simply because the market cap is tiny. Worst case is the more common path so far. Volume stays low, attention stays elsewhere, and the token continues to drift or experience occasional illiquid spikes that get sold. In that scenario, the undervalued conversation just becomes background noise while price remains largely irrelevant to the wider market. Retail often gets trapped exactly here. Buying the NVIDIA association will matter argument while the larger trend stays quiet and attention stays elsewhere. Risks are extremely high. Volatility is extreme because liquidity is so thin. A small amount of selling can move the price a large percentage in either direction. Downside is theoretically limited by how low the ranking already is, but in practice, these tokens can keep drifting lower or go completely quiet for long stretches. Retail traders love the long term cultural narrative and AI hype story and end up holding through multi week or multi month declines. Thin liquidity means exits can be difficult, and any remaining larger holders can still pressure the price. There's also the structural risk that comes with pure branding memes. Once attention leaves, it rarely returns without a completely new and credible catalyst. Short term, the picture still looks weak and reactive. You would need to see sustained volume and a clear change in market structure before any short term buyers could flip with confidence. Longer term, it comes down to whether a pure branding meme built around NVDA RTX can somehow reinvent relevance in a sector that has largely moved on from similar tokens. That's the only realistic path that turns these levels into something other than a long term afterthought. Nobody knows which way this resolves. The chart has been weak, the narrative is thin, and the token sits near the bottom of the rankings. So the real question is simple. Is this the kind of project that can somehow stage a comeback from the lower ranks on the back of AI or GPU hype? Or are we just watching another short-lived branding meme that peaked early and never recovered while people keep arguing about valuation?